Ladies and gentlemen, welcome to episode number 4 of Investing with the Boys. You got myself, Stock Savvy Shy. We got Logical Thesis. We got Sam Solid. We got a lot to uncover on this episode. We just had mega cap earnings. I promise you guys, we will deliver. Unlike Microsoft, Google, and Amazon, we got CapEx spend updates. Like maybe are they giving a second life to semiconductors? Does NVDA have a shot at 150 this year? And then we also have the 10-year is falling, finally below 4.5. It's kind of accelerating the breadth of the market a bit, and small caps are outperforming, and especially software. And we got to give a shout out. Palantir is officially a mega cap company today, $250 billion. We got a lot to uncover, but first, I want to shout out our sponsor, Osprey Funds, for sponsoring our show. You can check them out at ospreyfunds.io. But man, I got to pass it to Sam first because before he started, he was like, I'm heated. Let's get going. So, Sam, it's all you.
Okay. You're going to pass it on to me. Like, this is going to take the whole episode. I'm just going to talk about everything right now. I'm going to take the whole 60 minutes. I mean, what did we start out with this week? Because I feel like Trump just sat in office like yesterday, right? And then a million things happened after that. We got DeepSeek tariffs, mega cap earnings. We got Apple continuing to be the most evil company in the entire world. We have everything right now. Like, what happened to start off the week coming into the weekend? Like, we saw the market basically give off all of its gains last Friday, the day after we recorded last week. So obviously we didn't talk about that because the tariffs were coming. And then as soon as I eat breakfast on Monday, Trump is already rolling back in the taxes for Mexico and Canada. 25% gone. No longer an issue anymore, right? And the market, here's the thing. This is total luck too. Like on Sunday night, I was like, guys, the market's going to close green tomorrow, right? And it didn't. It closed red. But if you looked after hours, after Palantir reported, it was green, right? So technically I was right, but it was attributed to pure luck. But I mean, dude, we got 4 more years of this. Like, he just got into office 2 weeks ago. There's 4 more years of this. Get ready.
But do you think it's weird that he's been like kind of silent the past 48 hours? Like, he caused a ruckus, and I haven't heard anything this week.
was
The market's like
that.
feeling revealed.
Yeah, I was thinking about that, and it's like, dude, 2 weekends in a row, we just had the scariest weekends for like investors. Like, people were like Sunday night, like tripping out, seeing the open. Last week, we had the DeepSeek, 17% on NVIDIA at $580 billion of market cap. Crazy Monday. And then immediately after that, the next week, we have this tariff tantrum. And so it's like, I think he's just like, okay, let me give this a break. Let's see what happens. I will tell you, it is going to be a nightmare to be a trader in this environment, because anything you take any calls or whatever options you take gets destroyed in minutes from this guy's tweet. And it's like, last Thursday, we were about to close above the 50-day for both XBI and IwM. These are things that I trade often because I follow the small caps and the biotechs. And as soon as I took those calls, I'm literally watching the charts. I'm watching them close above the 50-day. He mentions the tariffs late Thursday afternoon, and it just tanks these indexes like 1-2%, and they close below the 50. They just look like a huge rejection on the charts. And the next day, obviously, continued to be red. I mean, within 24 hours, the calls I took were down like 20-30%. I mean, it's just, you cannot trade this environment because it's so anything can come out of left field. So I think ultimately, being a trader, you have to be a lot smarter about what positions you're taking, how much volatility you're willing to take on. And it feels like being in shares is probably a lot smarter than being in calls or whatever. Shai, what do you think?
Yeah, I mean, I'm a long-term investor. I'm not a trader. So like, this is something that it helped. I get to sleep
Sipping
really
on
well at
Kool-Aid right
nighttime.
now, man. You
Yeah,
gotta give a
I'm
shit
just
about this.
honestly, software is like running this year, and I was like, I'm
Yeah.
60% software, and like a lot of these names are above like 25%. We'll get to those later, but like I am a little I'm getting my little trader hat on a bit because I have a 12% cash position. I started an NVIDIA trade today after hours. It is shares, not options, but right now, like as soon as the VIX breaks $15 and hits a 14 handle, like I'm probably gonna buy long-term hedges because volatility is cheap, hedging is gonna be
Yeah.
cheap. Trump-led presidency, like Logical is saying, like one tweet, literally just one tweet, can cause the VIX to hit a 20, and that alone would just cause a 30% increase on hedging. And even if the market doesn't move at all, my puts are going to be in the green at least 20%, 30% most likely. So I want to be long-term hedged in this market, especially when we've all done so well the past 2 years. And I don't know, like I'm at 17%, and I think I'm the worst performer amongst us three. And we're 5 weeks into the year. Like that, things are going great right now. I kind of want to be a little defensive, like just how Logical was last week. But I am curious, like Logical, are you still in that defensive mindset? 'Cause you are getting pretty creative with some new trade philosophy that you were talking to us about before.
Yeah, I am somewhat defensive and somewhat aggressive. I guess it's all about being selective in this market. So as you've seen, like what's the RSP up? So SPY is up 3.7% this year. RSP, which is the equal weighted, is up 3.7% as well. So you're basically seeing the entire market performing well, right? Like, so I think market cap was doing well, but market cap weighted indexes, but the equal weighted is doing well. Typically, like the market cap weighting has been actually outperforming greatly. So what that tells me is like, actually now that SPY has caught up to RSP, maybe you can say there's really not much of an edge there, but basically throughout most of this year so far, the equal weighted has been outperforming the market cap weighted. So I want to continue to see that trend actually take off. And then I can know that, money is flowing from the big caps to the other companies, basically the SPY X Mag 7. Before I get into the specific trades and whatnot, I will tell you some good news, Shai. NVIDIA, man, if you look at that weekly candle, I don't know if you have looked at it, but I mean, if we were to close here, that's a big bullish engulfing. That is a
And it
beautiful
was
candle.
right above their
Wow.
40-week SMA too, like the
Yeah.
way that candle's looking. So that's why it looks like it wants to retest all-time highs again. That's why I
Look,
had to participate.
you totally might be onto something. If you get a follow-through week
Wow.
next week, it'll be beautiful. So yeah, I mean, I'm not against that trade. The technicals are lining up so far. What I will say though, right, like we were saying, any day you can wake up and everything goes to crap. So we'll have to see how that goes. What were you gonna say something?
I was just gonna say, like, we got a lot. This is a great transition into like the big tech earnings because the
Yes,
reason I
I
got
agree.
so confident in NVIDIA
Sure.
was a third of $1 trillion, like over $300 billion, was committed by the big four hyperscalers for CapEx spend in 2025. And I forgot what the percentages were, but three of the four exceeded expectations entering this earnings cycle. So I do think that 80 to 90% of that
No,
spend is going to go to data centers. What?
I was gonna say, so I actually kept track of the numbers over here. Amazon is at 105 billion, I believe. Andy Jassy was like a little, he wasn't really saying his whole number. And there was actually an analyst that came on, was like, oh, this is the amount, right? And Andy didn't really rebuttal it. So I'm assuming it's like around 105 billion for Amazon for fiscal year 2025. Microsoft guided down for 26. They didn't guide down for 25, right? So they're pretty much flat for 25. I was curious what that was, but I think that's what Satya said on the call, or CFO actually. But Google is mega increase in CapEx for 25, 75 billion. Meta is 65 flat, right? So they all pretty much are averaging out around on par what it originally was. But the interesting part was that, wouldn't you expect NVIDIA to make all-time highs right now? Like, what do you think?
Well, I think I do think there's some deep seek noise still on NVIDIA, and that is going to be an overhang theme or a narrative for that stock. But I just think the narrative of like quarter after the incremental increase quarter after quarter is way overblown. I think Meta is going all in, obviously. I think it was a 70% year-over-year CapEx spend growth in Meta. Like they're printing cash. Their operating margin is like 45%. Like essentially
Yeah.
half of every dollar they're making, they're
Yeah.
putting in their pocket. So they can
It's
afford
crazy.
to overspend on anything AI related. And they're doing that right now. So I do think that, and the tricky thing is training data. Nobody knows, like, as training data becomes cheaper and cheaper, how that's going to affect NVIDIA. And the DeepSeek playbook reveal, it's not going to affect any of these names in a matter of weeks, maybe even months. But the market's a forward-looking mechanism. In 6 to 12 months, that's when we might start seeing the implications of it. But again, I'm not worried about it at all, because I think at 125, it's a discount, because if they guide up again and you're seeing the capex, even though I think the capex is going to plateau this year, I think we can all agree 2025 might be the peak capex. You got Microsoft giving like a visibility in that in 26 already. I don't think it's going to continue going up like that. I think we see that peak growth this year start slowing off a bit. Optimization will come to play, but either way, Nvidia is going to be printing cash again next 6 months, and who knows when the party's going to stop. But as of right now, the hyperscalers just revealed we're not, in the words of Dan Ives, we are at 9 p.m. of this AI party still. So yeah, logical. What's your thoughts on, like, I know
Well,
you're
I was gonna cut in there real quick and ask you a question, right? You mentioned the training becoming maybe cheaper, but what about inference, right? Like it's still gonna be an expensive part. You're still gonna need GPUs. So I don't really see, like, maybe now the focus goes from training models to the inference portion, which is still gonna be a ton of compute. And you would imagine that NVIDIA is still leading in that. So I mean, I think that the main thesis you have there is like, who cares about training at this point? Like, inference is going to be where it's going to be at.
Inference price will go lower, but I think I'm betting on, as same with Sam, because he owns the Sarah Labs, that the volume will exceed the pricing. Like the demand will exceed the pricing decrease. But nobody really knows it. That's the tricky thing. Like there is noise. Like we're assuming, because it makes 1 + 1 = 2. Like it makes too much sense that if inference cost goes lower, like the demand will skyrocket, especially in the hyperscalers creating their own silicon chips. Like it's going to, like, you're seeing the what was it, titanium? It was a 40% cheaper. They're already Amazon made that commentary today on their conference call, or it's just the demand's going to skyrocket.
Yeah.
Again, software, guys. Like it's going to be a uber bullish thing for software stocks. But yeah,
I have
did
a
that
quick
answer your
question.
question? Yeah.
Yeah. Well, I have another quick question, or I guess a comment. I was listening to the Compound and Friends, their episode last week. I'm sure Sam listened to it. He likes their podcast, but they had a note about there are more data centers right now under construction than active data centers. That's insane. So there's clearly still a lot of, infrastructure being built out. And as you said, with like Satya on the call last week, we were talking about it. He mentioned 2026 is going to see slower growth than in 2025, right? Because it's like when you build out, and this is kind of our topics last time, is like when you build out that much warehouse space or whatever for the data centers, at some point you probably don't need more than that, but you probably need to improve the products that are within that data center. And that's probably going to be the next phase of that investment into the data centers. How that takes form and takes shape is kind of up to debate at this point. But I mean, clearly, like the GPUs and getting better GPUs still seems like it'll probably be top of mind. I just wonder, like you said, like where are we on that curve of growth? And we've probably seen, NVIDIA is up 12x or something in the last 2 years, right? Like we've probably seen the hockey stick at this point, and maybe it's a compounder from here or something like that, or it turns out to be a cyclical. I mean, we have to see what happens.
Well, I think you're seeing I'm looking at NVIDIA's fundamentals right now. 112% growth in 2024, top line growth. The street is expecting 52% for this upcoming year. Starting in 26, it goes to 21%, then 15%. So it's a big dip. But I think a lot of folks are banking on they're printing cash at 50% free cash flow.
No, without a doubt, dude. These operating margins for these companies are crazy.
It's
like
insane.
Amazon, This is my argument with Amazon, and I think you posted about this today. Or it was just like people are just selling Amazon, like just sell me your shares, right? Just sell me your shares. I think it is. Amazon was down like 10% after the print immediately. They recovered,
Was
and
it?
they pulled back again. Yes,
Oh my God.
like just right after the print, it was down to 220. It was pretty insane. But it recovered a bit, and then now it's like about in like the high 220s, right? I mean, it's negligible. You're a small cap. You invest in small caps. Like this is like nothing. This is
It's
cake,
nothing.
right?
Yeah.
But at
Mhm.
the same time, just like the extent of what these algos are looking at, because at the end of the day, the algos is what's moving the market. 85% of the market flow is through algos, right? So what was it looking at? It was definitely looking at the top line numbers in terms of missing on a lot of revenue and guidance. We already saw that guidance for Q1. Amazon technically missed that. They guided for $158 billion in terms of revenue for Q1 fiscal year 2025, which is next quarter. And sorry, that was the estimate, and they guided for less, 151 to 158.5. That is like a big no when it comes to any of these companies. Like if you're flat in guidance, like shame on you, slapping the wrist if you're a mid cap company or small company. But if you're a mega cap company and you miss guidance, like you're gonna be in the penalty box for a little bit. But
Well,
when it comes to like go ahead.
No, can I ask you this? Like, I do you think there's a world where a lot of folks or a lot of like companies are just kind of on pause right now because they know that like after seeing DeepSeek, or DeepSeek is just another example, but like they are hesitant to kind of commit to these massive like cloud contracts because they know that AI infrastructure and efficiency is going to improve, and it's also going to be a lot more cheaper, and they can see their own clear path to profitability on the ROI spend because they know like it's going to get cheaper and cheaper, that they're not willing to kind of adopt those massive cloud contracts right now. And you're seeing like this awkward, that's what I'm trying to, I feel like, because AI is blowing up right now, but you're seeing Azure, Google, and AWS miss on cloud. It makes me feel like there's a whole theme moment of a pause on a lot of
Okay,
the large cloud contracts.
so I get you. You're talking about cloud spending, right?
Mhm.
I agree with you. I think it's slowing down, and the CEOs have said that it's because of compute constraint. At least Satya, no, not Satya, at least Sundar Pichai, CEO of Google, and Andy Jassy, they said they are compute constrained, and if they weren't, they will be growing a lot faster, right? But I don't know if the market believes them. I think it's more of an overall restriction on spend in terms of cloud infrastructure. And it's not because of the fact that people are restricting on the spending. I think it's because they are figuring out ways to be more efficient with their compute, right? So we saw what happened with DeepSeek. DeepSeek is able to produce the same results, if not better, as far as the benchmark tests go against ChatGPT 4.0 at 95% efficiency, right? I'm not saying that China's right, but what I'm saying is that that is the narrative right now. The efficiency
Well,
through
are you
not compute, but efficiency through code. And this is where software comes in, dude.
do you think they're exploring on-prem or like hybrid cloud solutions? Like, is that what you're saying? Like they're
No,
finding ways around compute?
I don't think the workloads, the physical workloads, I don't think that that has diminished. I think what the savings come from as far as this company goes, that they're actually more efficient with what they're doing. So let's take, for example, that you start to take up archery, right? Are you going to be better on day 50 versus day 1?
For sure.
Yeah, you're gonna be a freaking bullseye, right? You're gonna be hitting targets by the time day 50 if you practice 5 hours every single day. So when did ChatGPT come out? In 2022, right? ChatGPT 3 came out in 2022. We're already almost 2 years past that. No, sorry, almost 3 years past that. People
I think
have
it came
gotten
no, it came
better.
in November 2023, I think. So I think we're 2 years in, but yeah.
I think it
No,
was
no,
like April
2022.
20. It was I think ChatGPT 3 or 4 came out, and I think the main moment was April.
November
20.
of
I
2022.
derailed what you said. That was a keep going. The
How
date doesn't
dare you,
matter.
man? How dare you? No, but see, no, you're good, man. You're good. No, but the explosion came out in November of 2022. That is when the queues bottomed. Okay. Like, it correlates exactly when it did. And then that's when you saw the numbers of the amount of queries on ChatGPT explode after that. So that's almost 3 years. That's 2.5 years from now. And you think that in 2.5 years, people didn't get better at utilizing it? That software engineers didn't get better at writing code that's more efficient on using ChatGPT or LLMs, whatever it is? They got better, right? So they don't need like a freaking like 100,000 cluster GB200 in order to do what they do. They need less, but they're going to do more, but utilize the same compute, but they're not going to be in demand to have more than that. I think that is what's happening. And that's why software is catching a huge bid for like Cloudflare is up 13% after hours on a guide miss. Like, come on, dude. But Matthew Prince did say that he expects to reaccelerate and be stronger with revenue growth in 2025. That's a big thing that all of these mega caps did not say. I feel like that's what matters.
Well, let's talk. I do want to pick. Should we transfer to Cloudflare, or should we stick with the big tech right now?
Yeah, we'll stick to big tech. Sorry about that.
Okay, so I do want to get to Cloudflare because I think you have an interesting thought process on it, but we'll talk about that later. Do you think that on your thesis, what would validate your thought process on what's happening? Would it be Splunk and Datadog showing weakness because observability is going to be diminished because people are getting smarter on actually spending on the cloud? You don't really need these like software tools to prevent yourself from doing that. Like, what would your tell sign be the rest of the earnings cycle of like, oh, that is actually what's happening?
I mean, the confirmation, regardless of whatever I say, is the price action over a period of time, not on a day-to-day basis, right? Because you can capitalize off the day-to-day movements as a trader, but as a long-term, a medium-term to long-term investor, which is where I kind of stand, you capitalize off of the more secular trend moves, right? Or the mid-cycle moves. So what have we been seeing for the last 6 months? Since July of 2024, we have seen NVIDIA hit their all-time highs and recede from it. Actually, no, they did hit it, but AMD was in the 200s. All of these chip companies, I'm not talking about the Broadcoms and the network companies. I'm talking about the major, like SMCI, Dell, all of these and Micron, all of these like picks and shovel companies, they hit their all-time highs that summer. They have receded very far from there since then. And then now you look at the software companies, dude, they're finding bids left and right. I'm not going to talk about Cloudflare in general, but I'm just saying, like, in general, these software companies, if you look at the cloud ETF, I keep on forgetting the name of the cloud ETF, but if you look at that versus SMH, which is the semiconductor ETF, dude, that thing is outperforming in the last rolling 6 months than the semiconductors. Like, don't get me wrong. Like, I could be dead wrong or I could be right, but the market does not care what I think. The market is completely saying software is where we are putting our money, and it is not picks and shovels.
I think what's interesting too, real quick, sorry, Amazon and anytime Amazon has an earnings report, you typically see a sympathy move with Snowflake, and I didn't see one today after hours.
I know, I noticed that.
So that
was
actually
odd.
That kind of is giving credence to what Sam is saying. Like, if you see Amazon up, typically they beat on cloud numbers. Then you see like a sympathy plus 3% on Snowflake. Today, Amazon's down 4 or 5% after hours, and Snowflake didn't budge. So that's
flat.
showing. I mean, that's great, right? I like that.
You saw cloud contract. Okay, Amazon was flat for cloud revenue, right? You saw it contract for Google and Microsoft, the two of three largest hyperscalers in the entire world, down after earnings, 10%. Snowflake is near its 52-week highs. Like, dude, what the hell what is going on here?
I mean, I hear you. I think I really do believe Palantir might be a better read through nowadays than obviously than an Amazon and Google for the cloud stocks. Like, as crazy as it sounds, because it's different niches for sure of the ecosystem, but I don't know. You're just seeing AI pick up so much momentum in Palantir, and if you feel like even though it's tricky because AWS and AWS numbers are massive now. Like, they make billions of dollars. That a lot of scale is going to come at play right now at certain points, and maybe a lot of people are ahead of themselves. Like, they're getting punished because their operating margins went from 39% to 37% on AWS. Like, that's wild to me. I will say one thing that I am worried about is AdTech. Meta and Amazon miss on ads. They did. Google did well. YouTube did
They
really
missed.
well. But I'm worried about Trade Desk. I really am next week. It's a less than 3% position for me because I just have not added it in a long time, a very long time. I am worried. But Netflix
I'd
had
be
a really strong print as
I'd
well.
be
It's like
worried for
weird.
you too. I'd be worried for you too, Shy. You know what I'm not worried about? Magnite is up 7% and closed at the highs of the day on high volume. So they're clearly not worried, but they're
Magnite's not
partnered.
like crazy overvalued.
I know
Yeah,
that's what
that's
I'm
the
trying
thing.
to
It's
say.
not priced for perfection. Yeah.
Yeah.
That's what I'm trying to say. Like, I remember like last year at some point, there was a report. I think we talked about it last, maybe one of our other episodes, but like the trade desk was down 30%. And on the other side, Pubmatic reported the same day and they're up 20%. That's a difference when you're priced for perfection versus your price for like nothing at all. No, you beat by like 5% on the top line and it's like, oh my goodness, this company's actually growing. We got to re-rate this, right? So I mean, it's a tough one, but I that's why I'm a lot more valuation conscious.
Yeah, but I will say, like, which company is going to be around in 10 years? The Trade Desk.
I won't be holding any of these positions.
That's
for
the thing.
10 years.
That's different. That's what I'm saying. Like the mentality, like you're in and out. You find those values, you can capitalize on it, and when it doesn't make sense, like you find the next opportunity. For me, I'm married to the stocks until the thesis breaks. Valuation does not matter, and now it's a good transition to one software stock that nobody really talks about. That's like nosebleed. Everyone says Palantir, 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 but they are using the wrong metrics for Palantir. Like it's Palantir has 40% free cash flow margins while growing the top line 32% this upcoming year. But everyone says, oh, EV to sales. Like, you can't use EV to sales when they have those metrics. Either way, I digress. Cloudflare is in the same ballpark as a Palantir's valuation. It really is. Trading at entering this print, trading at over 100 times 2025 EBITDA multiple. The reason I'm not using free cash flow because it's specific to their business. They don't care about that. They rather get the clients in because they have one of those stickiest ecosystems out there. You don't migrate out of, you don't leave Cloudflare. So like you can call it open source almost the way they incentivize clients to come in. But either way, I do want to pass this to Sam because him and I both own that name, and it feels like he's teetering on maybe not owning this name sometime next.
There's one thing I forgot to mention too between Palantir and Cloudflare is that Cloudflare is not a GAAP profitable company. In fact, they missed that mark by a lot this quarter. You saw the print. I saw the print as well.
Who needs profit?
I'm just as baffled as you are. I was telling Logical before we started, like I'm thinking about just selling Cloudflare like right now in Robinhood overnight hours because this is insane. Like it's not even like Palantir, right? Palantir has the narrative, right? He's in bed with Elon Musk and Donald Trump. Like his face is plastered on the screen during a football game with they're all the three amigos, right? Minus Malay. Malay's a third amigo, but I mean, I saw those. They missed the guide, right? They missed bottom line. All right.
Well, they missed the Q1 guide. They guided up on the full year.
Oh, okay. Okay. But no, okay. You know what? Actually, you got a point there. I'm sorry. I apologize. Laughing. You have a point there. The market's looking past the first quarter, and that makes sense. And Matthew Prince did confirm that on the call. An analyst did ask about that, I believe. I was only reading the transcript, so I didn't actually listen to the conference call. I was busy listening to Jassy. But he did say that he expects a lot of clients he saw it this quarter was that they were continuing to open their wallets coming into 2025. And that wasn't reflected in the earnings because they're already almost a month and a half into the quarter, right? So the market kind of rallied after that, it appeared. You saw after the print, the thing was down 120. Now it's at 160. And like, that's a crazy 20% move in after hours trading, but it is a $50 billion company, right? So it doesn't take a lot to move this, right? Palantir is 250 billion. Why it is at all-time highs after hours, I have no idea. That's a completely different story. But when I look at Cloudflare, 90% of DNS traffic goes through Cloudflare. They are expanding their TAM. They've been expanding their TAM for the last couple of years, getting to cybersecurity. Workers AI is just taking off with a lot of developers. But why are they trading at over 25 times price to sales? I don't know, man. I don't know. It's weird.
So Workers AI, you mentioned like that is
Yeah.
essentially why people are calling them the AWS of the new internets, like new age of the internets and the agentic AI world. That is kind of a crazy ceiling. Like I know it's pricey right now. I 100% agree with you. Like I just called it out. Like I wouldn't touch this at over $100, and it's at 160 now. So a 50% decline in price. That's when I would get interested. Like it's way up there. However, it is the internet, like you said, 90%. It's the internet.
It's 90% of DNS traffic.
It's a massive monopoly in what they do. Massive. And who's the former CRO from ServiceNow who jumped on board for Cloudflare?
Oh, the guy who got kicked out because of the Army contract.
Yeah.
I forgot his name. I forgot his name, but
anyway,
they signed him on. Yeah, that was
he's a wheeler and dealer. Like if you guys watch the Billions show,
he's
like
hustling.
whoever like the right-hand man is for the guy
Gus.
I regards
is it Sharonton Desai CJ? Is that guy?
CJ, it is CJ.
Oh yeah, that's
yeah. So he is a wheeler and dealer. Like he brings in flow to a certain point where it was a little sketchy at ServiceNow and he had to leave. But either way, he brings in that deal flow. And we saw that today. I think that's why it got such a big bid. Where I think they added over 15,000 net new customers last quarter alone. 1 quarter. 15,000. That's massive. And I do believe I don't know what the CRPO was, but it's growing faster than the revenue. And it was the biggest growth they had in like multiple years. So seeing like
Mark Anderson is the CRO. CJ Desi is the chief product officer, which is way more important.
Oh,
because they're the ones who are actually building the product. Yeah.
So either way, like he brings in the deal flow, or he creates that product in order to get the deal flow.
He's creating a product.
But you saw 16,000 net new customers in 1 quarter is massive, and like I mentioned, you don't leave Cloudflare, you just don't.
You know.
And also, what was the number? Spent over $1 million. Let's see. They added 55 large enterprise clients alone last quarter. That's massive. And they also had 173 customers spend over $1 million. That's up 47% year over year. So even though the revenue guide's like 27% this upcoming year, the customers' information is telling me a different story of what's going to happen. Like it's going to be that second half reacceleration. I do think that's going to be the beginning of a multi-year revenue reacceleration. And he also made some commentary that Q4, there was some budget constraints still, but as it finished the year, it was getting more normalized like it was back in 2021, 2022. That was like, that's huge for software in general. It's that comments, but I do think like you're getting hyped up a bit where, wow, like if they grow 30% top line growth for the next 4 or 5 years, which I really don't think is that ridiculous on a Cloudflare like product, if agentic AI will take off, it's not the worst thing, especially with how safe it is from being cannibalized from AI. Like you guys see the premium valuation that the market is willing to assign you if you prove that you will not just survive, thrive for the next decade in this post-agentic AI world. Palantir, Tesla, the clear 2 winners. I do think Cloudflare is cementing themselves as a 3rd winner. And if you ask me ServiceNow, I would have thought so too. But last week's print was, I don't know. I know they're doing a reorg change, but that was ugly, and they have to like figure out the way revenue recognition model is like gonna be a little tricky to transfer, which they have to do. But either way, Cloudflare is very it's solid. It's a beach stock to me, and it's not that expensive on a market cap. What is the market cap? Do we even know? Because this has mega cap says all over it, in my opinion.
No, it's not even close. It's like I think after hours it's up
50
13%.
bill.
It's like 56 billion now.
So,
Well, it's up 13% after hours, so
so
56 billion. That's not
ignore,
even close, man.
yeah, ignore valuation. Just ignore it. Like in 5 years, would it make sense
Yeah.
that something as important as Cloudflare will be a mega cap?
So, I mean, it would really come out from the amount of growth at this point, because I don't think they're going to grow sales like as rapidly to make the mega cap. But before we continue, I wanted to give a shout out to our sponsor, Osprey Funds. If you're into crypto and looking for ways to add it to your IRA or stock brokerage account, check out our partners at Osprey. They offer easy access to crypto through additional investing accounts, and there's no need for wallets or exchanges. Their Solana Trust, ticker symbol OSOL, and Binance Coin Trust, OBNB, let you get exposure to these assets right from your brokerage or even your IRA. That's pretty interesting. This is a heads up to explore your options. Make sure you do your own due diligence and research, and you could start by checking out the website where you'll find the prospectus and more details at ospreyfunds.io. Go ahead and check their website if you're interested, guys. So, the thing is that they could be a mega cap, right? They could pass that 250 billion. That's literally a 5x from here in terms of their valuation. And they're only producing maybe like $2 billion a year, right? They're not producing a lot.
They could though if they wanted to. Like I remember Matthew Prince said like he could pull that lever if he chose to. He just doesn't want to because he wants that growth in clients because he doesn't care about monetizing them as much right now in the bottom line.
No, that makes sense. That's what a lot of software companies do. Sridhar Ramaswamy is doing the same thing, right? He could pull that lever if he wants to. CrowdStrike, they're not really pulling that lever. Like they're just that good of a company that they're doing that. A lot of these software companies, they can pull the lever and be profitable. But that you already know that's how these software companies work, is that they can't move toward profitability, because if they do, they're going to sacrifice growth and cost, right? These cloud companies have to issue shares to get the top talent engineers. If you don't do that, if you don't have ISPC, well, not even high SPC, but if you don't issue compensation, they won't stay. The engineers won't stay. Like the top down engineers will be like, well, I'm going to go work at Google then. So you have to remain competitive. And the only way you can do that is to offer more compensation via SPC, and especially management. Sometimes they just pay, like Zscaler. Like, dude, Jay Chandri is like, he's good. His whole family owns so much of Zscaler. Like, it's not even funny. Like, if you're buying Zscaler, you're basically funding their life. That's all you're doing. I like Zscaler, but it's like, I don't think the company is ever going to get to some crazy valuation because of that he's literally using the company as his piggy.
Well, also the edge is a commodity. I'm convinced of that.
Cloudflare is going to take that over, to be honest.
Yeah.
Cloudflare is going to dominate in that space, and so is Palo Alto. They're already dominating. But I mean, going back to, oh, sorry, go ahead.
No, and if it wasn't for that, like that, I really do believe CrowdStrike would acquire Zscaler. It fits too perfectly synergy wise. If it wasn't for that whole family, just acquiring so much of that shares, yeah.
I don't know, man, but we'll see. I mean, the way that I see it is that software is doing well, but you're going to have these random names that are just going to keep running and running and running. And as much as I want to sell Cloudflare, just because like this is probably what I would have wanted when I first started buying shares heavy in like the 70s. It already made a double, more than double. So do I feel safer in a Cloudflare versus betting on like some other company? I mean, this is probably like one of the greatest companies that I could own, and fortunately enough to have a lower cost base. It's not a low cost base. Yours is pretty good, but I mean, it's just like, what would I buy at this point? There are other things to buy, but I don't want to trim that. I don't want to trim the roses to water the seed, to water the weeds. Like I want to hold on to the winners. The winners tend to keep winning.
Well, also like, I don't know. Let's just say we are in that .com bubble. I don't think we are, guys. But like, if we are, I think back then it's better to have those great. Like that's why moats matter so much to me, because like I do believe like logical. You're gonna get in and out of a lot of these software names. Same with you, Sam. You have like a portion of your portfolio for trading. For me, I don't do that. So like if a company proves they won't be cannibalized and I can like hold them for like hopefully more than a decade, Cloudflare feels that way, I'm willing to like eat that opportunity cost for a couple of years.
Yeah, no, that makes sense. That's actually a really smart plan to have, and that's what I'm kind of battling with myself, to be honest.
Yeah, don't get too cute. But yeah, I mean, Logical, I do want to pass it to you. You for Amazon's a big position for you. This earnings print that you saw this week from it, where it was just like, it was, I'd argue it was a meh. It wasn't good. It wasn't great. It was meh. Lots of noise. I believe that you just don't want to be a mega cap this year. Like, I think it's just the breadth's going to widen. That's not where the hotspot is. They're treating this year as an investment year. Don't bother. Are you going to trim your Amazon position, or are you going to maybe increase it if it hits a certain level? Like, what's your strategy on Amazon?
Yeah, I will. I'm gonna apologize just ahead of time because my cat is going crazy on my desk. You might be seeing him from time to time, so apologies for that. But I actually trimmed my Amazon going into the print today. I just felt like, look, and I trimmed Snowflake as well because I assumed that it would catch a sympathy bid or lack thereof, which it didn't. So that was pretty interesting. I think I told you guys that in the morning when I did it, but it's because, ultimately, sorry, my cat. So look, we saw the Google print, we saw the Microsoft print. Both of them had, a slowdown in cloud spend. And so, what's going to happen? AWS was obviously going to come in a little light. We knew that. And the stock is going to sell off 3, 5, 7% based on what we saw for the other names. There was no miracle that was going to happen that they magically stole market share. So to me, it felt like a low stress. Hey, look, this is my largest position at above 11%. I actually have been going back on margin with the amount of exposure that I've been adding on in the market. It looked like an easy way to pay down some of my margin loan and reduce that position size going into the print. So it just seemed like a pretty prudent move for risk management just because I've been adding on a lot of exposure elsewhere. You know me, I've been having fun adding baskets of names and adding to names that haven't really been performing well. I generally agree with you, right? Like I'm waiting for that RSP, like I was saying in the beginning of the episode, like I'm waiting for the rest of the market to catch a bid. And I'm waiting for, other names to finally see that breadth expansion, which would be very constructive to the longevity of this bull market. I've been saying that for the last 12 months. I think we have seen it. Like last year, we saw a lot of popular growth names. We saw a lot of small caps. A lot of small caps actually doubled last year, which is why, maybe last year I was holding calls in many names like Magnite and such. But, after they've doubled, there's really not the same risk reward as there was at $7. Now, the stock's at $19. I can't be holding calls at this point. Now it makes a lot more sense to hold shares. So, there has been breadth expansion for the last 12 months. I want to just continue to see that trend play out. And I agree with you. Like a lot of these companies are $3 trillion. Like, what is the upside? That is typically why I bet you if you did the average market cap of my portfolio, it's probably at like, I don't know. It's definitely under 5 billion, probably 2 billion realistically. Maybe 1 billion. Honestly, I hold a ton of companies that are trading at 500 mil, 200 mil, 1 billion, 2 billion. So look, that's the kind of investor I am. I want to find where the upside is. So that is why, look, if I'm going to spend all my time studying businesses, I have not even read an Amazon earnings report ever. And I don't plan to. Never. My largest position, I don't care. You know what I need to do for research? I run all of my, like all the time when we run our queries at work or whatever. They're typically being run on an AWS server, right? And half of the internet is hosted on one. And I order 10 packages a day from Amazon. Like I don't need to do any due diligence on Amazon. I know that they pulled forward their CapEx. I know that their earnings are growing now. I just know these few things. I don't need to check on this position. And to me, like, is there opportunity cost in holding mega caps? Absolutely there is, which is why I don't own most of them. That said, I do think that Amazon is still going to be a $300 stock pretty soon. I wouldn't be surprised by the end of this year, realistically. I don't think that this 1 quarter slip up is anything to be too concerned about. But you got to think about it, right? Like Amazon was at 170 not long ago. This is a large company. Now at 240, is it the same opportunity as then? No, the risk reward has gone down, right? There's less reward now. So you have to think about that. But yeah, ultimately, I am of the belief that Amazon will be the largest company on earth. It will be the first company to $5 trillion. Well, I don't know about 5 trillion, but 10 trillion and sustaining above 10 trillion. I actually do believe that. So I do want to continue to have a position in Amazon long term. But right now, there's a lot of opportunity in this market to look elsewhere and to look at things that have yet to catch a bid. You know me, I've been focusing on many parts of this market that are not mega cap tech. That's why I let most of this conversation just be you guys, because you guys are way more knowledgeable about these things. You guys have all the context. What am I going to add? You guys know what's going on. Like, you know the ins and outs of a lot of these companies. That's great. So I'll let you guys handle that. But yeah, I mean, I've been focusing on all sorts of things in the market: healthcare, biotech, different small caps, obscure ones, a little bit, not as bad as I used to be, possibly. There's still liquidity in these names that I trade, but you know, I've been focusing on ex-US names. Like I've been talking about that China trade in the last couple episodes. That continues to be a very strong trade. I talked about the Colombia trade. I mean, look at the Bank of Colombia. That chart is so strong, and that trades at 0.4 times book value. Go look at Bank of America right now. It trades at like 1.5 times book value. So if that is their primary bank, is it unreasonable to assume that it could trade upwards towards book value, maybe 0.8, 0.9 times book value? Of course it could. That's a double from here. And realistically, there's a lot of things changing in those parts of the world. Those countries have been essentially in a recession, depression, whatever you want to call it, especially their stock market and their stocks. We see the US dollar weaken. We see high valuations here in America. We feel like, you know, there's probably better allocations elsewhere. And I know Sam agrees with me. He's been talking about emerging markets. He's been talking about, you know, the US dollar rolling over. There's, you know, he likes the stock Grab Holdings, which is the Uber of Southeast Asia. And my thought is just like, why not go search for where there's more opportunity? And, you know, I guess people can say, well, look how that turned out for the people who did it in the past, right? They, you know, look at what Europe's index has returned in the last 10 years versus the S&P 500. You'd look like a fool right now if you were investing in Europe. Well, past performance is not an indication of what's going to happen in the future. So that's happened in the past, but we have rotations in this market all the time. And so the question now becomes, are we going to start seeing rotation? And I do think that potentially a sign of a softening dollar could be that tailwind that the rest of the world needs, because it's been clearly a headwind for a lot of these companies in these different countries. Did you have something to say?
No, I was gonna say. I mean, you nailed it, especially when I forgot to mention, like, I did say that the boogeyman for this upcoming earnings cycle would be the strong dollar, and I think we're seeing that, like the FX headwind. What was it $1 billion for Amazon alone? They mentioned over $900 million. There was some commentary that was that much of a headwind for them on FX.
Yeah, they were saying that they missed their revenue because of the fact that the FX currency. Otherwise, it would have been 11%, which would have been at the upper range of their guide for this quarter. But I do agree with you. I mean, you're someone who definitely notices these trends and basically sees the writing on the wall way before we do and acts on it very swiftly. And out of all of us, you probably capitalize on a lot of the gains very quickly before we even know what the hell hit us, right? You do make a great point when it comes to emerging markets around the entire world, how they've been massively underpriced. And it's very interesting you said that, because a lot of podcasts have been talking about that recently, how Europe has massively, like, they just have not recovered from COVID, right? Like, yes, Europe as a whole, European equities as a whole are doing well, but not nearly as much as the strength as the US since COVID.
Actually, they've been doing horrible, I think. You go look at the stocks, they're just down horribly. It's been months and years of just bad returns.
One thing you notice with Europe, as well as Latin America, because they're still hit hard by it, is the inflation. And inflation has a huge impact on the FX currency or the strength of their local currency, right? If you look at Latin America, especially the Brazilian real, which is their local currency, that has literally hit their pivot lows right around the time Mercado Libre and Nubank bottomed. And honestly, this is the reason why those banks that you were talking about, Bank of Colombia, in addition to the Bank of Brazil, have hit their pivot lows, because these companies are highly impacted by the pricing power of their local currency. And if that bottoms, so will the financial institution in these companies. That's the reason why in the US, the financials are doing really well, because of the strong US dollar. It really depends on how you look at it. But I think that your knowledge of how this really, like, you're able to figure things out and pivot at the right times. You know, like for me, it's like, dude, like, I kind of know what you're talking about, but like it didn't actually hit me until you started talking about it just now. That's the reason why Mercado Libre is near its 52-week highs today. That's the reason why Nubank rallied 30% off of its lows since the Brazilian stock market pretty much bounced when the US dollar hit its resistance at 110, right? Right after this, I'm going to start looking at some charts, dude. This is like really starting to make sense, but
Go,
go ahead.
go look up CIB, which is the Colombian bank chart, and go tell me that's not the strongest chart ever. You know how usually you start seeing a stock, even Tempest AI is a good example. As the stock rallies entirely vertically, you start to see each day have decreasing volume. CIB, Colombia Bank, actually had the opposite. The volume kept increasing as as it went more and more vertical.
What do they call those? The three soldiers? Like
Three soldiers, if you have three big candles in a row. This thing had like 5, and they were increasing volume.
The 5 soldiers.
and now it's just consolidating on decent volume, and it looks like it's just going to rip higher realistically. And again, they have a whole political administration change similar to what basically Argentina had with Milei last year. And go look at the Bank of Argentina; it's up like 3x in that time. And
Dude.
actually, I just saw a note from JP Morgan before we got on this call that they are starting to get bullish on the Chilean elections later this year and how the right wing is probably going to take over there. So I might start looking at some Chilean equities. But just wanted to quickly, besides, we're talking about Europe, I have 2 points here. So actually a couple of points, and please bear with me. Look, the European economy probably should be having a lower PE because they don't have the monster tech companies that we have, right? They don't have like these insane return on capital type companies. So that's why I think at the index level, it doesn't make a lot of sense. For a while, I was holding that as a placeholder, but then I started thinking, I want to actually have individual company exposure. So I'm going to talk about one thing real quick because I talked about Poland. Look, the inflation rate in Poland was because you mentioned inflation being really high, right? In 2022, we all had high inflation. In America, we had like 9%, right? So in Poland, it was like 11%, and they had a 5.6% GDP growth. So that's really deeply negative, 5% negative GDP growth on a real basis. But in 2024, their inflation slowed down to 3.6%, which is not that much higher than us, and their GDP grew by 2.9%. Still negative, but you can clearly see that trend is starting to really normalize and stabilize, and hopefully starts getting to the other place where inflation comes back down, and actually GDP growth will actually start outpacing that. And so again, this is a country that is actually having really strong GDP growth compared to a lot of other countries. So I do like Poland. It's a stock that I've been following for a long time called Auto Partner. It's like a small cap company. They do like auto parts, but they have like smart distribution centers. They're very profitable, trades at like a 10 PE, 12 PE or something like that, growing like double digits. And they've built like these warehouses on the outskirts of Poland, where now a lot of their revenue is actually coming from outside of Poland. So I like that because it's kind of like, I like companies that are listed in Europe because they're not catching the flows because no institution is buying European stocks, but they're actually making a lot of their business outside of their native country. And so there's another one, Watches of Switzerland Group, WOSG, that's in London. They do a lot of sales here in America. They have showrooms, so you can't own Rolex, the company. You can't own equity in the Rolex company, but they're an authorized dealer and they do a ton of sales for Rolex. And then, there's one more European equity I want to talk to you guys about because I found it most recently. A lot of smart people have been tweeting about it. I've seen the name for a long time. It's been basing for a while. You guys might be super interested in this one. It's called AlphaWave, and it's a small cap semiconductor company. They have they're in the connector space, so they're similar to an ALAB or a MRVL, and their custom silicon business. Look, I'm still early in my research, but their custom silicon business has grown 1,000% year over year. I think they have Amazon as a customer, something like $300 million of revenue commitment from them. I don't know how that's continuing to evolve that partnership with Amazon. But again, if we start seeing these CapEx numbers, I mean, this is like a $1.5 billion market cap company. You're talking about ALAB, which is 10x bigger, MRVL, which is like 80 times bigger, right? Like there's real opportunity in a company that is, advantaged with their technology in this space that's going to get a lot of tailwinds and a lot of spending. So I think AlphaWave makes a ton of sense. And again, they're doing sales outside of Europe. and they are a tech company. So instead of having to own European, the index, which is filled with all sorts of slow growth, non-tech companies, you can find gems in Europe, because the best part about it is they're probably trading cheap because nobody's bid up these stocks. So the baby's been thrown out with the bathwater. And that's kind of how I think about it right now. Is there's a lot of opportunity there. So I've continued to increase my exposure in Europe. Again, I still have the China trade on. I still have the Colombia trade on. And I'm still looking for more ex-US companies. I think the last leg of this bull market to me is, and I do feel that we are starting to get to a point where it's, look, I mean, Palantir's trading
Last
100
leg.
times sales. Yeah, we're getting towards the last leg, I think, in my view, of like reasonable good returns moving forward. Actually, I think Vanguard just had I heard this on the Animal Spirits podcast. Vanguard had their views out for the next 10 years and basically said, we think that bonds are going to outperform equities over the next like 10 years. Like equities do 4% and bonds do 5% or whatever it is. And it's like, it's kind of believable at this point, because the valuations that you're starting from, is it possible that we have a lost decade? It's not impossible. I think that people who think it's not possible just, aren't market historians. Like I don't want to be in a position where I own something at 30, 40 times earnings at a mega cap status like a Microsoft, where I don't know what those forward returns are going to look like. To me, the risk outweighs the forward returns. And thus, why would I hold something like this? For the time being, I do feel that there's still a lot of value in small and mid cap opportunities. But what happens when those small and mid caps start getting bid up and we start seeing, you talk about Magnite being a reasonable valuation company. What happens when that becomes over fair valuation and goes towards overvaluation? Where is the risk reward then? And so that's what I'm eyeing. I think that we will continue to see breadth expansion. We'll start seeing a lot of these other names catch a bid as, maybe RSP starts outperforming. Money from the market cap weighted the biggest stocks flows into the rest of the companies. And then those stocks end up being really heavy. Maybe forward returns start looking like 5% and not as a whole for the market level, rather than 9, 10%, 15% that we've seen for the last 15 years. That doesn't seem sustainable to me. So you just have to think about every dollar you're investing. What do you expect from it? And the expectations moving forward aren't looking as good in my view. I think in the short term, we're still set up pretty nicely and bullishly. I'm definitely not bearish. I just told you I've added so much exposure. I'm back on margin, but I am being very cognizant and trying to, over time, just buy things that I see value in. And every day that passes, I see less and less value in the market, at least in the US stocks.
That's interesting you bring it up, because you're talking about the late cycle in the bull market. I mean, we've seen kind of mixed commentary from multiple sell side firms. Even Goldman Sachs thinks that we're gonna have a lost decade, 3% up for the next 10 years annually. I mean, that's not technically a lost decade, but when we really compare it to the last few years, like that is pretty much a lost decade. But to be honest, I mean, I find it so hard to believe that with all the innovation that's happening today, I'm on the forefront of all this, right? I work in IT. I see these new practices and strategies and technologies being implemented every single day. It is very hard to believe that our company is going to slow down their innovation for the next 10 years based on just the theory that it could happen. And I'm not saying that this is all a theory or that this is all fiction, but I think we're probably in the very early innings of a massive innovation boom. When I see the capability of a lot of these LLMs that I use every single day, exponentially more than I used just a couple of months ago, right? I think the use cases have expanded, and I think that it makes my day a lot more efficient and my work a lot more efficient. And on top of that, it makes you feel better about myself, dude. What makes you work better at work or work harder at work than feeling better about yourself? Always makes you feel better. The small accomplishments give you very big wins, and it motivates you to work a lot harder. And it's very hard for me to believe that we are in the late cycle of potentially a bull market in terms of valuation. But I could kind of see your side, because there are some things that have ran pretty far away where they're pricing in things that are going to occur 5 years from now. There's a few companies that do that, but at the same time, I still do think there's a lot of potential out there. Like you're saying, in these European markets, like they have it. Like, who's to say that all the engineers in Europe, which a lot of them work for U.S. companies, by the way, like this is the thing where a lot of the money and investments are in the U.S. And honestly, so are the workers. They're working for U.S. companies remotely because they make a lot more money work for a U.S. company versus a European company because they're able to pay out more. So we are kind of stealing the talent, and this current administration is putting gas on that fire. Like, he wants all the smart people to stay in the US, and he wants to get rid of all of the fluff, right? I'm not going to get into politics, but that is literally what he's doing, right? And regardless of whatever everyone thinks, set aside, that's what's happening, right? So if that's some of that talent, let's say about a 70% of the expertise in the US for the last 20 years. Let's say we go down to about 60%. If we give 10% out to all of these small cap companies around the entire world, dude, these companies are going to like triple. They're going to quadruple. They're going to have a 10 bagger because their valuation is so low. But once the market sniffs this out, they're going to dive into that stuff. That's what we've been seeing lately, right? So, I mean, what are your thoughts, Shay? Do you think we're in the late cycle of the bull market, or do you think we're at the beginning of an AI boom?
AI boom. I think we're in the third innings of a baseball game. If for this bull market rally, I think indices are peaking. I think next year is going to be a bad year for a lot of people, but there's going to be specific
25.
2026. There's going to be a really bad year. I think it's actually going to be a red year. That's what I mean by a bad year. But there's going to be hot pockets that are going to be thriving. I think software is going to be one of those names. I think the software, whenever the baton's official, like the firework earnings cycle, where we see like massive reacceleration on the top line, like to the point where like Palantir went from 26% to 31%. We're going to see that more, like with a couple other names are going to join that party. I don't know if it's going to happen this cycle, but sometime this year, there's going to be one earnings cycle where you're going to see a lot of the software names of the consumption model just like kite way up, and it's going to catch a lot of people off guard. And you saw Palantir go up 15-20% with that valuation they already had. Imagine a software name where it's like very mean, like, or median type of valuation. They guide that significantly up. It's going to be a 40% mover. Like, I think it's going to be very crazy. Snowflake went up 35% on a good, not great earnings report just last cycle. I think once they have those like perfect, like really good ones, it's going to be explosive, and it's going to be a multi-year. But I do think there's still pockets where there's a lot of high quality lagging names that aren't catching, like small caps. I think healthcare AI is not even getting started yet. It is so early in that
Definitely
theme.
seeing biddings across the board with healthcare. I'm not gonna lie,
Yeah.
I've been noticing.
It's actually healthcare was the best sector in January. Just FYI, that's what happens when you have a lot of value out in the market. Nobody's been catching a bid for months. Look, I just want to clarify one thing that I'm saying. I'm not saying that. I guess I did start off by saying late cycle bull market, but what I meant by that is more so like what, again, and I was trying to talk about this, the forward returns. What does that look like versus what we like have seen in the past? We're not going to do 15% at the index level anymore. I just don't see it. And maybe you guys are saying that that's what's happening. Look, I think we are actually in a position where we have the technological infrastructure that this AI stuff is, increasing so much faster than what the internet was doing in 2000, right? Like, yeah, we had internet, but Amazon didn't get going till 2012, like 12 years later, right? Like, so now it's more like how much have LLMs and technology actually improved in the last 2 years? It's been crazy. The amount that we use it is insane. So I do think that it can continue to do very well. I think there will be pockets of outperformance. You have to pick the right names. But at the index level, these mega caps are $3 trillion. They're already spending how much money to invest? How much money can they continue to grow? Those are the things that are really heavily weighted inside the index. So I'm talking more about at like the US index level. I feel like the forward returns, because like, look, you can tell me Cloudflare is going to be a mega cap. That's a drop in the bucket in the overall stock market. Like, even if it 5x from here, the index isn't going to move, right? Like, so it's just going to take a lot, like money's going to flow from this one to that one, but does it mean that new money entered the system? That's a good question. So then maybe you end up with flat returns. So all I'm trying to say is like risk reward when we think about moving forward. And I mean, look, you can say that Cloudflare, you guys brought it up, it can be a $250 billion company because that's a mega cap status. Probably. That makes sense. But you know, Sam, you just sat here and told me that you feel that at 160 it's extremely expensive at 56 billion. And Shai makes a good point. It's only $56 billion market cap. Can it be 250? Of course it can. But now we're like starting to at 160. You agree that we've already priced in several years.
No, people said the same thing about Axon at 150 though. Like expensive can get even more expensive if they can keep accelerating estimates while maintaining their moat. Like when you have a monopoly, it just doesn't matter your valuation. Like Axon's one name where I owned it from like 80 or 90 bucks, sold it at 150, got back in at 220, and now I don't know what it's at even right now, but it's always
It's at
been
$1 million.
expensive. Yeah,
It's at $1 million.
it's pricey. Oh, oh my god, it's at 677. I did not know it was that high. That's what I'm saying. Like
it's almost $1 million. It's almost $1 million.
I know, but I thought it was expensive at 220, and then it went to
Yeah.
6, tripled from there. So like,
that's what I'm
how
saying.
many more triples does this company have? I don't know the answer to that.
That's
Maybe
the
a
thing.
lot. Maybe
But
a lot.
international TAM is a thing, and if they have this
That's
kind of
right.
monopoly domestically,
And also retail,
long
right?
runway.
Like, they're also like going out
Yeah.
of, you know, police. They're going into retail. Imagine if they
Yeah.
capture that TAM. That's like 10x the TAM.
Well,
more.
I think the big thing about Axon, and Shai agrees with me, is that their software like keeps you in their ecosystem. Like you're not going to go anywhere because their software has a subscription model versus just selling the actual hardware. So that's where they have their moat. But I mean, guys, I could honestly, can we just do like a 5-hour podcast? Because I feel like we could just keep going. But I mean, we got to end it at some point. And it was great. It was great. Yeah. We started out with the mega cap earnings. We started talking about software. We started talking about late cycle. We started talking about the broadening out of the market. This episode was crazy. But yeah, I mean, definitely for next week. Next week going to be a very interesting episode. I mean, who knows? What do you think? This weekend, we're probably going to hear about like a 50% tariff happening. The market's going to be down. It's going to limit down Sunday night. And before the end of the week, we're going to have the engulfing candle. We'll see what happens. But I mean, definitely crazy week. Shout out to our sponsor again before we head out. If you're into crypto, look for ways to add to your IRA stock brokerage. Check out our partners at Osprey Funds. They got the true trust funds, OSOL, OBNB. Go ahead, check out the website at ospreyfunds.io for the prospectus and do your own due diligence, guys. Appreciate you guys showing up here. Take care, everyone.